Well, hello again, Mavic traders, and welcome out to your Currency Daily Recap. This is Ankit here, and let's break down today's market price action. It's a Tuesday, June the 25th, almost the last stretch of this trading month. So let's get in. As always, we'll be taking a look at broader market first, taking a look at then the currency baskets, and then taking a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Now, jumping into our market analysis, let's just jump right into the numbers and the headlines of the day. So today's headlines, again, not a whole lot happening. Markets are in a consolidation phase, and that's pretty much it. I mean, this is what we get usually by the end of the month, where we just don't have a whole lot of data to really drive the markets, and we just have to rely on the overall market sentiment. And right now, that's just in the consolidation phase. On the other hand, we had the Canadian CPI, which again came higher than expected. So after some consecutive numbers on the downside, this was a little uptick there. So we'll have to take a look at the Canadian dollar since we like the CAD onto the upside going into this week. Now, let's just jump into the numbers here. And what do you see in the numbers? Not a whole lot. If you look at this, we have the highest move today was 0.18% and the lowest end was 0.11. Again, these are not the numbers that you want to be trading. We want to be trading things that are more, 0.5%, 1%, comparing against a 0.5%. That's really where we get the biggest move. But these numbers are dismal. So we don't have to spend too much time looking at what happened, but then go back to the basics and look at the plan for the week, what we were expecting on the upside, what we were expecting on the downside. That's really going to find out if those relative strength and weakness are playing out. Now, looking at outside of the currency market, S&P slightly up, but again, back and forth price action, consolidation phase. Crypto again had a nice jump, but remember yesterday we had a big drop in crypto. So just recovering some of the losses, but overall crypto remains weak. We had gold dip down and we had the oil that dipped down. So outside of that, again, nothing really major. Now, looking into the cryptocurrency, take a look at it. Bitcoin Cash had a big jump, 7.56%. Outside of that, it was a decent jump across the board. Remember, yesterday, the Bitcoin did drop below the 60K. So we've seen a big quick recovery here. Where does it go from here? Well, we'll look at the charts. But again, the overall direction remains to the downside, but then we get these little big bounces between that really compel some traders to get back in it. But is it the right time to buy that, or is it the right time to sell on that rally? Again, that's something we always need to consider. Now, if you take a look at our outlook, again, outlook remains as a +3. But within that +3 outlook, let's take a look at the chart. What do you see in the chart here? Well, we had a massive break. We did ran up, and now we're just going consolidation phase. So usually these are the consolidation phase that we just don't know how long they will last. Usually, if you're looking for a breakout strategy, you want to see these pullbacks or these bases to really break out of. But again, that's not where we are at. We are just in the consolidation phase. Yesterday's candle was quite ugly, and here we are getting an inside candle today. So again, basing price action, don't really want to be a buyer here, don't really want to be a seller here. I think the markets are just consolidating here. Now, if you just take a look at the schedule, again, we had the CPI behind us. You can see it was a positive number across the board, but not a whole lot going into tomorrow. We had the Aussie CPI tonight. This is something I'll be watching as well. Remember, the Aussie is on the top of the end of the range. So this is something I'll be looking at either for a range bound trade. If it comes out weaker than expected, it pulls back. But if it does come out higher than expected, as is expected, then we'll look for some breakout strategy in the Aussie. But outside of that, you can see this is not a whole lot. We have on Friday, we have the US PCE price index. But for the next couple of days, I don't really see a whole lot on the schedule to be really worried about. So let's just jump into our currency analysis and take a look at where the relative strength weakness is and what the velocity score is telling us. Now, if you look at the velocity score, you can see that there's a whole lot in the middle. And whenever you get that, it just means that things are consolidating, which potentially will break out one way or the other. But you want to be avoiding these consolidation phase since we don't know how long they will last. One thing that's evident is that the yen and the Swiss franc remains on to the downside. So that's really where relative weakness is. But then outside of that, a lot of the things are right in the middle. So we have to really wait for that confirmation. CAD is a +1. And then again, we'll take a look at the pound acting a little strong here. On the cryptos, again, you will see they're all +2. But I just, we have to take a look at the trend score and see if there's any change there. So let's just jump into the possible trades ahead and let's take a look at some setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So looking at our possible trades ahead, let's just jump right into some of the dollar pairs. Remember, I talked about dollar extensively going into this week. There's 2 currencies I was really watching, dollar and the CAD. So the dollar doesn't have a breakout yet. You can see that we have still a lot of back and forth. Now, bring it down to a 4-hour chart. It's still holding in there. But remember, we're getting these pullbacks, but these pullbacks are getting bought out. So these pullbacks are just getting a good buying opportunity, but just realize that if you're going for ultimate breakout, we need a confirmation above this level. So we don't have that yet, but I won't be surprised if we do get a breakout. If we take a look at the bond yields, so again, I base everything around the US bond yields as well, and you can see that the US bond yields are just going sideways as well. So not really getting a whole sort of lift. If the bond yields break out, again, that will help the dollar to lift up as well. So not really getting there right now. The Canadian dollar, on the other hand, was the one that we would like more to the upside. You can see we still like it to the upside. Again, based on the CAD, based on the dollar, I think CAD looks better. It did break out of the resistance right here. We got a confirmation candle. I know we have a wick here. But I won't be surprised if we continue with that pattern on to the upside. So CAD goes on the top of the list here. Outside of that, you can see the Aussie, which we have a CPI for tonight, is just holding, consolidating at this pattern. Look at these wicks on this one. It's not going anywhere. So I'll be very careful for this one if it's going for a breakout. But outside of that, this thing could go back within the range here, which again, weakens further, get towards the bottom end of the range, it rises up. That's what we call range for price action. And we can get a decent opportunity within the range as well. But right now, the big question is, should I go for a breakout? And again, I wouldn't want to go for a breakout until it breaks out. Now, if the Aussie weakens after the CPI, again, I'm looking for the momentum to weaken. Again, this is the level of resistance on the currency basket at 77.80. So if it breaks below this, I don't mind taking a look at a short as it dips below the 50-day moving average as well. On its counterpart, Kiwi is holding in there as well. So not really getting a whole lot of jump into some of these currencies. The British pound did rally, but take a look at it. This thing is still sort of range bound. Remember, we had a weakened currency score here, and this thing is just rallying a little bit. I'm not interested in buying this rally here in the pound. I think I'm interested in selling some of the moves that we're getting here on any of these little rallies. So outside of that, Swiss franc continues to weaken. So I still like Swiss franc to the downside. Now, let's see, look at the dollar Swiss franc. You can see that this thing on a 4-hour chart, it's just right up against our resistance. It did break out. It pulled back a little bit. The next level is about 89, 85, 90 area. But this one has room to climb. But if we take a look at what looks the best based on the momentum, again, CAD Swiss franc. I mean, take a look at it. Beautiful resistance level. And we're getting a nice little run here. Use the moving averages to guide your stop. But again, I like these ones. But remember, I like this on a higher time frame than lower time frame. Because sometimes these could take longer for this to develop. So that's another one. If the Aussie weakens, I can take a look at it. There's a lot of consolidation in Aussie pairs. So let's not touch the Aussie until we really get a break one way or the other. This is just a very choppy trade. I think the Swiss franc probably do better. If the Aussie is stronger, I think Aussie Swiss franc probably would be a decent call. Take a look at it. This looks very similar to the Aussie Swiss franc trade. This thing is just up against that resistance. I think it's also worth taking a look at some of the other currency pairs like Aussie CAD, which is right at the bottom end of the range. If this breaks that, I think there's a decent opportunity. Again, for that, we need Aussie to weaken, which is not the case. So again, these are the things that goes in your watch list. You put a price alert on it, and it will notify you when that happens, and you know that will be a good time to look for these breaks. Now, same thing with the Kiwi CAD. You can see that Kiwi CAD looks a lot weaker below the 20 and below the 50. And if we look in the higher time frame, remember this had a nice breakout and it's fallen through that breakout. So I think at this point has a more downside risk than the upside potential. So in conclusion, we're looking for these breakout confirmation. Until then, I want to sit on the sideline. Again, this is that last week of the month where things quiet down. Not a whole lot on the docket. So just be very careful and very picky with your picks. Outside of that, again, looking at dollar Swiss franc, still like that. And even dollar yen, still like some of the upside. But outside of that, we'll take a look at some Aussie pairs tonight. But again, time to keep it on the sideline unless you see a good opportunity. Otherwise, pay attention to relative weakness. And we'll be back in the next update. Thanks for joining. See you, everyone.